Recording in progress.
Hey everybody, this is David Skrika. So we're going to get right into it. I'm up early this morning. It's Labor Day. So we're going to do our stock chart of the day for Labor Day. And today we're going to ask the question, is Apple an expensive stock? So this is kind of interesting. This is Apple going back about 10 years. The PD ratio, the EV to EBITDA ratio, and the price to sales ratio. And we can see in the past 10 years, Apple is now near the highs of most of these valuation metrics. You can see it's I think price of sales is always the most important. It's something that people don't, I don't think, look at it enough. And you can see it's trading at over 7 times sales. And see, this is the thing with all the stock buybacks and that sort of thing. You reduce, again, I've talked about this at length, you reduce the amount of shares outstanding. So that makes the EPS higher, which makes the PDE lower, even on lower sales. But you can see Apple's back to where it was in 2020 and 2021. And the thing about it is, you can see, back 10 years ago, Apple was only trading at 10 times sales. Sorry, 2 times sales. And companies that trade at 7, 8, 10 times sales, those are like usually high growth companies, growing revenues 10, 20, 30, maybe 50% a year. And of course, we'll look at that in a second with Apple, but of course, Apple is not doing that. Apple is growing, at just a few percent a year right now. So anyhow, this just shows you the huge move. So again, let's go see when Apple was relatively cheap, starting back in, we'll go back to 2012, that 2013 area we saw was 2 times sales. Sorry about that. We're back to 2013, actually. So you can see Apple was $10 and now is $189. So, but at some point, again, it will get expensive. You can see when it got really expensive in early 2020, it dumped, about 30-40%. And then, then of course, COVID, everything went up. But and you see then Apple again had a pretty good decline during the bear market in 2022. So the question is, when will we finally, peak on it? And at some point, we're going to hit peak Apple. I'm not saying Apple's going to go to the way of, BlackBerry or Instagram, but if you go look at these things, you'll see, the history of these technology and cell phone companies is usually there's a dominant company or companies for a while, and then they kind of peak out and then roll over. So, IBM was the most dynamic tech company of, the 1960s. Now we consider IBM kind of a dinosaur, right? Ericsson, Nokia, Motorola, these kind of companies, BlackBerry were the initial boom players in cell phones. Now they're like very minor players. BlackBerry doesn't even sell phones anymore. So it's like that's, I'm not saying like that's going to happen to Apple, but I think that IBM analogy will probably be good for Apple, in that they'll at some point just kind of like, become like the stable blue chip company, pay a pretty good dividend. And, and already they're not very dynamic, right? Like I got a new MacBook when I was in Canada, and it's obviously faster and nicer than the older one I had, but it's nothing, over the top about it. I have a Samsung, I have a Galaxy Note, it's just as good as an iPhone in my opinion. So, and you have a lot of people like me too who aren't addicted to their phones, and I'm like, as long as I can just get my emails, listen to some music off YouTube on it, whatever. I don't need the $1,500 new iPhone. But anyhow, you can see here in 2022, remember Apple's quarter actually is the end of September. Apple had, 394 billion in sales, and it's going to decline this year by about 2% to 387 billion. So you can see that's what I'm talking about. Now, Apple's had stagnant years, and they've always found a way to kind of come back and the whatnot. But, a lot of times too, it has to do with the launch of a new phone, so that people do the upgrade cycle. But anyhow, it just seems to me that Apple, judging by, again, let's go look at these valuations again. Thanks to Charles Bellio, does a great job of this. It just seems to me that Apple is really, really kind of, in the latter stages of its growth phase. And, of course, another thing that we've seen during this market rally, and, in the first 7 or 8 months of this year was Apple, Microsoft, Amazon, all of the big tech stocks kind of led. So it wasn't just some of Apple's. You can see, and you can see from this chart here, from the price to sales going from just about 5 to 7.5, and the PE going from about 20 to 30. a lot of it's multiple expansion because these stocks just for whatever reason kind of have got a bid, you know. So anyhow, I'm gonna leave it at that. So is Apple an expensive stock? Kind of does look like it is. I'm not really interested in betting against it. I don't have a position in it. But you know, as me, you know, people and me, I'm a value guy. So if I'm looking for a value stock, there's a million other things out there I rather pick right now. And what's funny about these kind of mega stocks, like, you know, one of my mentors obviously was John Templeton, and Templeton really didn't do a lot in large caps. He was actually a small cap guy. Like the stocks that I like that Athabasca, you know, the oil company. Those are kind of the stocks he would be buying. Like that. I'm not saying he would buy that company, but that size of company and that type of company. Templeton never. It wasn't like Buffett. He didn't have some, Buffett with Washington Post and Coca-Cola. Templeton didn't have some big large cap company that he owned for whatever 40, 50 years. He'd usually own companies for whatever, a few years, 3 to 5 years, find them when they're undervalued, and then sell them when they were no longer undervalued. So anyhow, we're going to leave it at this. I hope you enjoyed this video. I hope you all had a great Labor Day weekend. I'm actually happy the summer is over. Business really slows down in the summer. I think I'm going to have a couple more companies to consult with now that the fall is here. So it's always nice to make some more money as well, and just be busier. You know, like I have to say, because, you know, I had, pre-done a lot of these videos when I posted my videos on Sunday, and I've already pre-written articles for a publication I write for, and all this kind of thing. I was kind of sitting around, you know, there's no football yet that, or there's no NFL football yet that starts next week. And it's like, I kind of had nothing to do, you know, which is very rare for me, but, and I just edited my book last week. So yeah, I was kind of like, yeah, we need to get something going, but I have a lot going on now. I'm actually launching a new side venture. I'll talk about that. It has nothing to do with finance or economics at all. Something I kind of wanted to do for fun. So I hope everybody enjoyed this, and I hope you again, you'll have a great Labor Day.